Ching, ching, ching! Let me hear them dollar ring. Hello and namaste and welcome to MOM Square. Money on my mind. I'm Vivek Shetty, an engineer by profession and an investor by addiction. If you and I share the same addiction, we are on the right page. Yes, guys, we are on the right YouTube page. And while you're here, do not forget to hit the subscribe button and click on that bell icon. And guys, feel free to share the video. We gotta grow this MOM Square family so that we can all grow together financially. Excuse me, guys. I overcame some rough cold over the past couple days. That's why I was, offline, didn't make a whole lot of videos. My voice was different. I mean, I couldn't speak and such. It was not COVID, but I was hit with some sort of a bad flu. But anyways, we're back at it. We're back at the hustle, and let's get it right into it, okay? Today's video, guys, is to talk about one of my favorite stocks, Lucid Motors, CCIV, okay? The ticker symbol is soon going to be changing to Lucid Motors, so I'll start referring to it as Lucid, okay? So, guys, a couple weeks ago, I made a video talking about how I was going to stay on the sideline before I bought into the dip for CCIV or Lucid, okay? So this was when it was trading around $23, $24, right? Again, I do currently hold CCIV stocks. I've held it before that video was made. And again, I'm into this stock for a long term. Okay, it's a long term position for me. It's not a trading stock and whatnot. Okay, so I thought when I made that video that the dip could be extended down back to the $20 or $18 levels, and I knew I could be wrong. But I would rather not buy the dip because I was expecting a market crash, and I still do expect a market crash, though I feel like it gets dragged out because of various factors, now the infrastructure bill and whatnot this week. But I do believe the market crash is coming. If you haven't checked out a video where I talked about why a market crash is coming, please go check it out. I'll put it in the description section. Coming back to Lucid, okay? So now 3 weeks later, I'm sitting back in the same dilemma, deciding whether I should buy into the stock already or wait, to see the stock dip further. We all obviously don't want the stock to dip further. However, it has grown so fast, so quickly, and that's not a good sign really for a sustainable stock. It turns into more like a meme stock at that point. Sorry, So anyways, so it's now trading at around $27. Okay, so I had to pen down some numbers to understand what is a practical price point I want to throw additional cash into the stock at. Okay, and that price point is still going to be around $20 to $18 price range. Okay, anything below 20, I'll start buying more into this particular stock. Okay, now a lot of you are going to say, wait, I don't think it's going to go down to $20 or $18, which it very well couldn't. They may not see that. Okay, however, couple reasons why I think it may go there is one, still because of the market crash. Second, the valuations are crazy high, and I say crazy high for a reason, which is this. Which is the sole purpose of why I'm making this video, so we all understand the valuation and how to justify or how to rationalize this valuation before we just blindly jump into the train and buy more stocks at these levels. First of all, guys, if you're thinking about buying CCIV at these levels, I would suggest please don't do that yet, okay? Again, make your decisions based on your research. I'm just making a recommendation as a fellow hustler, okay? Just a YouTuber, guys. Not a financial advisor by any means, okay? So do your own research. Now, let's jump into why, or the rationale behind why I believe it's at a high valuation right now, okay? So at current state, at around $27, it's trading around $43 billion of valuation, okay? It's high, in my opinion, okay? Considering this year, maybe next year, yes, we should be seeing around that valuation. Okay, so let me take a step back. Okay, how do we justify a valuation for somebody like CCIV or Lucid that's brand new in the market, with not much revenue to back it up, right? You've heard me talk about intrinsic values and whatnot. It doesn't, it's not feasible to calculate intrinsic value for Lucid. And besides, stocks like Lucid are never going to trade at intrinsic value, in my opinion, right? Because Tesla, Lucid, any other EV segment, anytime there's a next big thing happening in the market, people try to trade them at high valuation, or they think high about the company, and the stock starts to trade at a high price to sales ratio. Okay, take the Tesla example for instance. Okay, in fact, a lot of our valuation today for Lucid is going to be driven based on Tesla's valuation. Okay, and I'm going to use the price to sales ratio for Tesla to come up with a valuation for Lucid using their sales forecast. Okay, just follow me through this whole thing. Okay, I'm going to throw a table on the screen to talk about Tesla first. Okay, so it's important to understand Tesla's price to sale ratio before we start talking about Lucid's valuation. Okay, so I picked up some revenue forecast for Tesla over the next 3 years. Guys, I limited the study to the next 3 years because I do believe that after 3 to 5 years, we'll start to see fading of valuation for this EV segment. Okay, because currently, yes, it's a big thing, right? I mean, it's the next big thing. Okay, EV segment is going to grow, whatnot. There's soon going to be saturation in terms of multiple players in the market, and just it's going to be an old thing, right? Give it 3 years, in my opinion. Okay, I do believe that it's going to be the valuations will start to become more realistic, and that will start to fade the PS ratios and such. But for the sake of this video, we are gonna obsolete that theory and just stick to our 3-year sales forecast plan. Okay, so I took up the sales forecast numbers from various analysts and basically made an average, or took the average value. Okay, so as you see on the screen, for 2021, the sales forecast for Tesla is around $49 billion, $66 billion for 2022, and $73 billion for 2023. Now, we all know that Tesla is trading around $680 right now. For right or wrong reasons, we're gonna just say that it's at $680. Okay, so now, as you see on the screen, I'm leveraging ARK Invest's target price. Okay, now we all know ARK Invest, Kathy is very bullish, and in general, about the market and such. And when it comes to Tesla, she's even more bullish, in my opinion. Now, it could be right, it could be wrong. I like to look at the worst case scenario as well when I'm investing in stocks. So I took both the scenarios here. I didn't took there's 3 scenarios that she ran, I believe. There is a bear case, there is a bull case, and an expected case. Okay, I don't know why I did that. So the bear case, the target price that she set for 2025 is around $1,500. Okay, the expected case is around $3,000. Again, this is 2025. I know we're a couple years out. I just took it to work backwards to come up with some target price over the next 3 years for Tesla. Okay, so what you see on the screen is the target price for bear case and the expected case. Okay, now obviously we know how many how many common stocks are out there in the market for Tesla, around 1.1 billion, just rounded it up. So I use that stock price based on stock price and use the outstanding shares to calculate the market cap for both bear case and the expected case. Okay, you follow me so far? Those numbers then gives me the PS ratio, so price to sales ratio. We know the price, which is 680 for the bear case and expected case, again this year, and you divide that by the sales forecast for 2021. Okay, so the PS ratio is around 15 right now. In fact, I believe if you look at 2020 numbers, the revenue is at $31 billion. So they're trading at around 21%. Okay, if you look at 2020. So 2021, it's trading at around 15x PS ratio, price to sales ratio. Now, again, we have PS ratio for both bear case and the expected case. You'll follow what these 2 columns, the PS ratios for bear case and the expected, is what we need to carry over to calculate our valuation for CCIV. Okay, so the next table right here on the screen is basically sorry guys, that's my pet Louis. Going back to CCIV valuation, I took the forecasted value. forecasted sales or forecasted revenue for CCIV, 721 million for this year. So the 2021 numbers, our target price or valuation is going to be a little skewed because there's not much revenue this year really to support it. So the best valuation, if you want to pen down one for this year, would be around that 24 billion because that's what the pipe investors are paying. So around $15 stock, okay, is what I would say would be a fair valuation in today's date, okay. I'm not saying it's going to go all the way to 15. I know, because again, we like to hype, we like to have a high valuation estimates for these kind of stocks. So go jumping back into it. 2022, it's going to be around 2.2 billion in revenue. Again, this is sales forecast. We're not going to talk about how challenging it could be for them to hit that number. It means, in terms of operations and whatnot, but let's stick to that sales forecasted numbers, okay? And then the $5.5 billion, $5.53 billion for the 2023 revenue, okay? Now, what I did was took the PS ratio for the bear case and expected case from the Tesla model and tried to develop a market cap, basically a market cap for the bear case and the expected case for the next 3 years, for the 2021, 2022, and 2023, what you see on the screen there, okay? Using that market cap and the outstanding shares, which is 1.6 billion, you can calculate the target price or the price for, estimated price for Lucid based on the PS ratio, the bear case PS ratio, okay? So again, don't look at the 2021 numbers because it's kind of misleading because there's not much revenue to support it. So the best thing you can think about is $15, okay? Though the table will show $6.9 because the revenues are super low, okay? 2022, if you take the same PS ratio as Tesla for bear case at 15, the stock price should be at $20. Now, this is where my target price of $20 and lower comes into play, okay? If I look at the expected Tesla case, again, which is aggressive in ARK because it's Kathy's norms, right? It would be trading at around $28. So if you own stocks at these levels, at $27 at today's levels, I would not recommend selling it, guys, because you never know which way the market's going to go, which way, again, think about this stock as a long-term investment. Don't try to time it. Don't try to trade this one. I've been there, done that. It doesn't really work out well. If you feel like you have to book some profits, feel free to do so, but I am holding on to my stocks for the long term, okay? That said, so $20 is where I believe the stock will be based on the 2022, by end of next year. It could be higher again, this is where I think purely on valuation basis, if I compare apples to apples for the PS ratio, and it should be done that way, right? Because if you're comparing it to Tesla in terms of technology, in terms of the closest competition for Tesla, why not use the PS ratio for Tesla to come up with the stock price, for Lucid? Okay, so however, look at the future, right? In 2023, this could be a $50 stock. In the long run, I do believe that this is easily, maybe give it like 4 or 5 years, this very well could be a $100 stock. Again, because their revenues are gonna rapidly or grow faster, in my opinion. They would be profitable much earlier than Tesla was, in my opinion, as well, because they're literally copying a lot of business strategies or the revenue streams as what Tesla is doing. Okay, so I do, because it's easy when somebody like Tesla has set the roadmap and you're following that roadmap, in my opinion, and you're building and developing things further, from that. There's an advantage, to it, in my opinion, and that's where I believe that they will be quickly profitable. And this is where Lucid, in my opinion, stock price will go up, and Tesla, give it like 4 or 5 years, I do feel like it will come down. Okay, again, PS ratio at 15 in general is high, guys. Okay, you like to see stocks trading at around 1 to 2 PS ratio. Okay, with all the hype stocks right now that are EV segment, green stocks, whatever you want to call it, they're all trading at a very high PS ratio. However, it's not sustainable because, like any segment, like any hype, or pump, if you want to call it. There is a dump. Again, I'm not hinting that this is a pump and dump stock by any means, guys. Again, in this channel, our goal is to normalize our expectation, look at the financials, look at the numbers, and try to come up with a logical way to justify or rationalize a stock price. Guys, again, hopefully this video was helpful to rationalize why I'm waiting to buy into this stock. Anything under $20, I'm going to sit on the sideline and wait for that, okay? Now, again, I do have decent holdings in CCIV, so if anything, I'm just going to miss out on an opportunity if, if things don't work out according to what I'm seeing for the valuation. But again, it's all about the discipline, so I'm gonna wait and trade this one, or actually invest in this one in a disciplined manner. If you guys like this video, do not forget to hit the subscribe button and click on that bell icon. Press the like, share the video, and show some love by, once again, hitting subscribe. Until next videos, adios.